Hey, this is Cedric Youngelman, your host of the Bitcoin Matrix podcast. Thank you so much for checking out my show, where we have philosophical conversations about the economic, societal, and cultural implications of Bitcoin and the future of money. Please make sure that you're subscribed to the Bitcoin Matrix. And if you're watching this on YouTube, hit that like button so that more people see it, and put those notifications on so that you don't miss out on any fresh and new content. This episode with Alexander Leishman about how the sausage is made at a Bitcoin exchange is brought to you by River Financial. I thought it was a really great time to bring Alex back to the show because of all the controversy and confusion stemming from FTX, Luna, Celsius, and all the bullshit scams that happened in 2022. I think it's great to hear from Alex and how an exchange is supposed to be properly run, especially a Bitcoin-only exchange. I'm able to produce this show in part thanks to my sponsors, and I'm very selective about who I work with and put in front of you. Start 2023 by setting up zero-fee DCA with River and track your Bitcoin performance throughout the entire year. I love River because they are a Bitcoin-only company, and they make it simple to leave the next generation better off than your own. To get started and find out for yourself, use the link in the show notes and get up to $10,000 free when you buy Bitcoin and miners at river.com. Then get your sats off your exchange. My favorite hardware wallet is the Cold Card from CoinKite. It's definitely worth learning how to use it. You can get a 5% discount by using the referral link in the show notes. Bitcoin Day Naples is rapidly approaching on January 21st, so I hope to see you there at the conference or the happy hour afterwards. Great speakers are already lined up, yours truly included. Use the code MATRIX now for 10% off your tickets with the link in the show notes. Can't wait to see you in Naples, Florida. Bitcoin 2023 will be back in Miami Beach one more time. Education, celebration, and hyper-Bitcoinization will once again be on the agenda. Join us May 18th to 20th. Use the code MATRIX for 15% off your tickets. And now, let's enter the Bitcoin Matrix with Alex Leishman from River to hear more about building generational wealth with Bitcoin.
What is real? How do you define real?
You can't jump into cash. Cash is trash. What do? You get out.
Alexander Leishman is a chief executive officer and co-founder of River Financial. Prior to that, he was the engineer and investor at Polychain Capital and the security software engineer at Airbnb. Alex, welcome back to the Bitcoin Matrix podcast. How are you?
I'm doing great. Thanks for having me on.
Yeah, I'm super excited to chat. I want to, one, thank you for being our lead sponsor. It means a lot and it goes a long way to powering the show. I also, you were on in early September. I think it was released on September 19th. We talked about a lot about what's going on at River, but, I thought it was a really great time to bring you back. I think a lot of things have happened since then, and I would love to get deeper into what's going on at River. So, maybe to kick it off, why is River's custody model in-house?
Yeah. So since starting River, we decided to do things the hard way. We built our own custody infrastructure from the ground up, and some of that is technical, and some of that is legal and regulatory. And we made the decision that the Bitcoin ethos, not your keys, not your coins, also applies to a company. And if we were going to serve customers in the United States in good faith, we wanted to know with 100% certainty that if they're keeping their coins with us, which a lot of people choose to do, even though we encourage self-custody, that they're secure. If we relied on a third party, that adds one or more counterparties that prevent us from being able to 100% guarantee the security of anyone's coins. Now, in Bitcoin, nothing's 100%, which is why we encourage people to custody themselves. But at least we know with 100% information what's going on in our own system. There are reasons to build on third-party custodians, but we decided that we weren't comfortable with the risk that introduced. We're also very, we're security people, we're Bitcoin people, we're engineers. So doing that ourselves wasn't really an overwhelming challenge for us. Another reason that we did that was not just the sort of like cryptographic or technical security, which we do believe is much stronger at River because we're Bitcoin only. Our custody was built on native multisig. So these other custodians often don't build on native Bitcoin multisig because they need their custody to work for every different blockchain, which most of which don't have multisig because they're smart contract account based chains. So that was one major technical reason. But there's more of a legal and a legal reason as well, which is the legal risk of having coins with another custodian is unclear, right? If that custodian has a failure, or even has a legal issue, right? Even if someone doesn't steal the coins, let's say that they just have a legal liability and they owe a bunch of money to somebody because they did something wrong. What does that mean for our customers? A lot of this stuff is people have some ideas that maybe the coins would be safe, but a lot of this has no legal precedence. It hasn't been tested in court. So that was one more reason to just it's all in our control, and it just removes a lot of worry. So that's a more long-winded way of describing some of the intricacies of this decision, but we've been very happy with it.
Yeah, I think it's a great way to go. What kind of obstacles were in your way? I mean, to kind of get where you are with this model in terms of even regulation.
Yeah, so the regulatory side is the biggest challenge with this, because with controlling other people's funds comes the burden in the United States, in most states, of having to get money transmission licenses. So in the United States, we're a regulated money transmitter, and we have these licenses in maybe 40 states. I lost track at this point. We serve 48 states. Some states don't require licenses, and we got them one by one over 3 years. It was a slog. So we actually, when we launched River, we were only in 8 states or something, and we went state by state and just did it the hard way. It's not cheap, it's not quick, but it allowed us to do things the right way. So yeah, one of the reasons that people do build on third parties, a common one that companies will build on is called Prime Trust. There are others. Is that these companies, these other firms, these other custodians are serving as the money transmitter, and the company is able to just focus on marketing and building an app, but they actually are not allowed to touch the money. They have to let the other company handle that. So that was another reason we did it ourselves, was by being able to be the ones that actually facilitate the movement of funds, we can provide the level of customer service that we want to provide to our customers, and we're not beholden to we can make compliance decisions. We don't have to wait to see what our custodian thinks about our customer. So that's but the downside, of course, is speed, right? Building it yourself is a lot slower and allows you to, and it's not like custody itself is a huge user experience differentiator in the short term, right? In the long term, it is if a custodian doesn't if something goes wrong at a custodian, but in the short term, it's not like it's some massive win as a company.
Right. So then in terms of all that, maybe in terms of Prime Trust, this was a question from Playful 121. Do you kind of see Prime Trust as a huge honeypot in terms of, how it custodies all these shit coins and maybe the degradation of security around that model?
Yeah, it's hard to say. And, look, I don't know anything about, the health of Prime Trust business or, any internal risks. I don't have any information anyone else has. I just see that with every customer they bring on, no one is certain about the legal aspects of all of this stuff in custodianship and crypto. So you can't ever be 100% certain. So every new customer they bring on is another risk to the other customers, right? Because Prime Trust is the financial institution. Every user at a company built on Prime Trust actually has an account at Prime Trust. So they're actually the financial institution. So if it turns out that some of these companies were doing funny business and funds were moving on behalf of customers and Prime Trust didn't have the right checks in place, maybe they're liable. I don't know. I'm not a lawyer, but it's because of like how unclear a lot of this stuff is that it just like it's just sort of like it worries me a little bit. But there are benefits to using Prime Trust. You don't have to. There's a bunch of stuff you don't have to do yourself, and it's shared infrastructure. New startups can use. There's a good reason to use it as a from a business perspective. So there's pros and cons, and yeah. So yeah, but it's a reality. These shared custodians are central points of failure, and it's like 10 companies could fail if one of these fails, not just one.
Wow. Well, I mean, that's kind of interesting. I want to dig more into the exchange business. So what I love about, sort of the purview, the Bitcoiner purview of even the company taking sovereignty of the coins is just that, is having full control and not relying on others, even from a company perspective. Thinking about it from along those lines, does River make money off of holding or doing custody for their customers?
Not at all. We don't make any money on that. River's 1-to-1 backed, 100% reserve. Every coin that a customer has in their account is a coin in our custody. So because of that, that's why we actually encourage self-custody. We don't make any money holding your Bitcoin for you. We do it because as a business, if we didn't, they would just go to Coinbase. And that's just the reality of the market. So we don't actually want to hold on to anyone's coins. There's no economic benefit for us other than that it's necessary to have customers. Because as much as Bitcoin Twitter, as much as we all want this to be true, most people just aren't going to self-custody. And yeah, that's just and the situation, as unfortunate as it was with Luke, is now being used as propaganda. Like I just opened up Ars Technica front page, Bitcoin core developer loses coins, and so this is going to scare even more people. Like, oh well, if a Bitcoin core dev can't do it, then and I'm not saying that's like valid logic. It's not, but that's just the reality.
Yeah, I haven't dove down that rabbit hole with what happened with Luke just yet. What about withdrawal? What is the withdrawal process like at River?
So almost all withdrawals are just completely instant on chain or Lightning. So the way it works is when you buy your Bitcoin at River, there's two ways of getting cash to River. There's ACH and wire. If you wire funds and you buy Bitcoin, you can withdraw it immediately. To do your first withdrawal, you need to verify your ID with us. But once you do that, you can withdraw any funds in unlimited amounts instantly via wire. If it's a larger withdrawal, we'll actually pause the withdrawal until we do a phone call with you to verify. And that's just for our own users' security. And we find actually most people want that and like that. And then if you bought your Bitcoin via an ACH transfer, or you just immediately bought from your bank account, there's a holding period there. And depending on sort of like various risk factors, because of the nature of the ACH payment rail and its reversibility, we'll hold the funds for some period of time before we let you withdraw it on chain. Most clients have a great experience. We have a mobile app, and it's just like a wallet. You can send and receive on chain or on Lightning, and it usually works beautifully.
Yeah. So what about if someone never took self-custody and they've started to accumulate some sats and maybe they have a sizable balance? Is there any limits on how much they can withdraw in a period of time?
No. If it's a very large withdrawal, I mean, like if you're withdrawing, 8 to 9 figures worth of Bitcoin, tens or hundreds of millions of dollars, then, there will be a sort of like that won't happen immediately, right? There's going to be a phone call. There's going to be some process behind the scenes to move those Bitcoin out of our cold storage. But, depends on how you define sizable.
Yeah. Well, what I'm really getting at there, some exchanges actually put limits on how much you can take out a day, a week, a month. So, in that case, if you've built up a sizable balance, it's going to take you months to get your Bitcoin off the exchange. Even if they have the Bitcoin, they won't allow you within a period of time.
No, we don't have any limits.
And I'm sure that has to do with they don't actually have the Bitcoin, not because it's not reserved, and that's not what I'm getting at, but their custodian has it. And they probably have to work out different methods there of extracting it from the custodian to get it to you, and there's a little bit more counterparties just involved.
And that's and a lot of that is, with these counterparties, compliance adds another level of friction here, right? Because if you're relying on a third-party custodian to approve a withdrawal for coins, they need to be comfortable with the compliance risk of allowing this customer to send this amount of money, but they don't know you because they don't talk to you. You're not their customer service. That's this other guy, but that other guy doesn't have a license to transmit the money. So you're the one on the hook if you send funds and it's a bad actor. So that's another reason, like, we do things the way we do it at River. We know our customer and we're the custodian. And so we go, no, we know this guy is legit. Yeah, sometimes we do see funny business, but we'll catch that, right? We can, we don't treat the customer like a criminal to start with, right? We say, hey, just calling to see, seeing some interesting things here. Just want to get some clarification of what's going on. And it's usually all sorted. It's usually all pretty innocent. Every now and then you get someone who's actually bad, but that's really the exception.
Right. And then, Francis Pouliot on Twitter wanted to know why it's important to you to build Bitcoin wallet software in-house.
So when we say, like, we built our custody in-house, we didn't write every single bit of code for everything in our custody by ourselves, right? There's a lot of very standard hardened Bitcoin custody tooling out there using open protocols like partially signed Bitcoin transactions and very, very, like, hardened key generation tooling and all sorts of stuff like that. So it's not like we wrote everything from scratch. We built on all of the existing tooling out there, and most of it is better than the code we'd write ourselves. So it wasn't that difficult.
Got it.
We didn't re-implement libsecp 256k1.
Right. And Asher Hop wants to know, like, when something like an Android app.
Yep. When we can find an Android dev. There's an Android position open actually on our website. So if you're listening to this and you're a talented Android dev, or even better, sort of know some Android and iOS, would love to chat. River.com/careers. So just waiting to find the right person. And so we won't have an Android app until we can find the right person. We don't rush hiring. We hire very carefully and very slowly. So it'll happen when it happens.
Makes sense. Now, I should have prefaced all this with, Happy New Year. And, 2022 is over. But the reason I'm going with this is, what happened mostly in Q4 since we spoke. And how are you feeling now going into 2023, about all the decisions you made around River and the way you've built it?
I'm feeling very good about things. Over the last year, I think everyone in the industry learned a hard lesson about learned about the other side of all of this financial innovation that was happening in crypto, which we frankly just stayed away from. We definitely evaluated it, right? We had all these customers reaching out to us. Can you add yield? Can you add all these things? And of course, we're running a business. We deeply investigated some of these things, but at the end of the day, we just came to the conclusion that's just, like, we don't understand. I don't even understand this stuff. Like, am I stupid? Like, maybe, but I know my limits. So, I guess I'm just stupid and I'm not going to add that because I don't understand it. Turns out, no one really did. And the whole thing just fell apart. So, we just listened to our gut at the end of the day, and that was really validated. It was sort of like, there were some doubts, if I'm being honest, like, over the last year or two, seeing BlockFi, just soar past us in terms of users and revenue, and like, on a track to go public. And I was like, are we like missing something here? Like, like, are we doing something wrong that we're running this in such a boring way and we're not adding more exotic stuff? And like, I could never just get there, and I'm glad I didn't, because leverage in Bitcoin just don't seem to work. So, and I think the other thing people learn in this industry, again, that sort of validates the way we run things, is just counterparty risk is real. Like, I don't think it's as like in the traditional fiat world, people learned that in '08, but like they're usually not issues like that. And this year in Bitcoin and crypto lands, everyone learned the hard way. You can't trust anybody. Like things like and everyone learned a very, very, very important lesson. And I think the founders who make it through this and who are starting companies now are going to have really healthy businesses long term because they understand the risks. But you have not just like FTX blowing up, but then you have like DCG on the precipice. Like who thought DCG was going to go on, right? And then there's like actual banks that are having issues, not from a solvency perspective as per se, but just like compliance and regulatory, and like are these banks going to get like hammered on by the government? Like who knows what's going to happen? And so I feel overall very good. I think the counterparty risk we're exposed to is extremely minimal. The biggest counterparty risk we have is just on like the mining side, right? Like we don't run our own mining facilities. We try and find very high quality partners to keep our miners with. And so far we haven't had any real major issues, but that's the only thing we don't really like fully control ourselves. Everything else is very much in-house. So overall, I feel very good. And going into 2023, our strategy for this year is just perfect what we have. We're not doing anything new or exotic. We're taking the products that everyone knows and loves, river.com and our mobile app and River Lightning services, and just making them better and just going heads down, like perfecting these products. So that's our plan for 2023. And I couldn't be more excited about that because we've done something new like every year for the past 4 years. And it's always been like, a lot of, there's like thrash in the business. There's always new things going on. 2023 is year of focusing, building, and perfecting what we have. And I couldn't be more excited about that.
Yeah, that's exciting. That makes a lot of sense. Dipping back a little bit into 2022, what did you notice about your user base? Did it grow during this bear market? Are plebs still stacking?
Yes. So our user base grew substantially in 2022. The volume of transactions has decreased overall. So the big money isn't showing up like it was a year ago, but the number of transactions happening is at an all-time high. So both November and December were all-time highs for transacting activity on the platform. And I anticipate that continuing to grow as our investments and just perfecting our product and really making the product improvements that we've put off because we've been doing so many new things. We'll continue to push that number forward. And so the plebes are stacking. There's going to be people who in a few years look back and this is the time that they accumulated, the majority of their Bitcoin. I think the money shows up when the price starts going up again. The big money seems to like more prefer to buy high for one reason or another. So, yeah.
I've heard that. Yeah, it seems like it's on green days, everyone buys, and on red days, no one buys. And I'm sure that gets extrapolated into cycles. Also in 2022, starting, I think in 2019, you guys got involved in Lightning. Yep. And so what does that journey look like, and what has activity been like in 2022?
When we first started River, we launched with Lightning deposits and withdrawals, mostly as an experiment. Back then, the Lightning Network was still in its infancy. It was certainly not like anywhere close to mainstream adoption. And most Bitcoiners had never even used it. The reason we added it was we were like, well, we're focusing on Bitcoin only at River. So that, the whole point of this is to try new things, right? Try the things that Coinbase won't try. Try the things that all these other multi-coin exchanges aren't going to be doing because they're busy supporting all these different assets. And I'm really glad we did because, as we initially launched with a very simple, basic, infrastructure to support that, because it's not like people are moving a lot of money through Lightning. But over time, our node just developed into a very big node on the network. More and more people started using it. We started getting a lot of people routing through us as our brand grew, our node reputation grew. And all of a sudden we had this like, it's like a lot of stuff, a lot of money there. And then, a bit over a year ago, we were like, well, this Lightning infrastructure that we have is interesting. And other people are asking us if we have like APIs for this stuff and they could build on it. So we made a decision that we were going to carve this infrastructure out as sort of a very separate sort of system, kind of like AWS style, like the whole Jeff Bezos story, right? And we have this Lightning system internally that the River consumer product would talk to like this, but this Lightning thing is like another business, right? So, we started that project like a year ago, really upgrading the infrastructure here, hardening it, building the right sort of APIs that we can externalize, and then El Salvador comes along and is like, we need somebody to be the back end for Chivo, and this was I think a few months after Chivo launched, and we're like, well, isn't that an interesting coincidence? We have the perfect solution, and so we sort of rushed to get everything in place and finish it, and been very proud to have Chivo as one of our clients, and we're focusing in 2023 and growing this River Lightning Services business a lot. Just later last year, we actually like named this and brought and sort of exposed it to the world that we were doing all of this. I don't think anyone really knew River was involved in Chivo for about a year. And yeah, so we now have like a really nice dashboard for River Lightning Services. We have a website for it at rls.dev. And our mission here is really to move Bitcoin forward, accelerate its adoption as a medium of exchange, and allow businesses all over the world to connect to the Lightning Network. The vision there is really that running high uptime, secure Lightning infrastructure at scale is not easy. It never will be. It's very different than running a blockchain node without any cryptographic material or statefulness or anything like that. And so if most companies are going to build on Lightning in the future, they're going to need something like River Lightning Services to make that really easy. And because we got really good at this over years, we realized we could save every company that wanted to integrate with Lightning lots of time and money, but they just use our system.
Right. So then what are you seeing in terms of capacity? I mean, how big of a Lightning node is River in the Lightning network?
So I think we're like the fourth biggest node. It changes every day. The ranking is a little bit, like this like Lightning capacity, this channel capacity number is sort of it's a little bit of a woo-woo metric, but it's about as good as we got in Lightning. But last I checked, we were number 4. That goes up and down over any given week. So I'm not sure what we are today. We also have 2 nodes. So if you add them together, we're probably up there with close to Kraken or someone like that, in BitTinex. But we're seeing volumes. The 2022 routing volumes on our Lightning node grew tremendously. We have a Lightning report out, actually. You can find that on our blog.river.com, that actually details the numbers that we saw through most of 2022. And sort of towards the end of the year, we were making about a third of a Bitcoin a month in routing fees and moving hundreds of Bitcoin through the node a month. And I hope that trend continues. We've seen Lightning volumes go down a little bit during the holiday season, which I think is probably normal. But overall, we're seeing a lot of interest across the board from wallets and exchanges and other companies that want to integrate. And hopefully we have some announcements coming soon with other people we're partnering with.
Awesome. And then Farouk Ahmed X on Twitter wanted to know, and he said, are you working on Lightning and Nostr? And I wasn't sure if he was meant separately or together. So I just wanted to hear your thoughts.
Yeah. So there's no formal thing happening at River yet. I actually spent, I like to do like a project every year during the like downtime during Christmas. Like as a CEO, I don't get to code a whole lot anymore. So this year I decided, I saw all this buzz about Nostr. I saw Jack was playing with Nostr, and Will, who built this client called Damus for it. I knew he was a really smart guy, so I was like, I'll check it out. I wasn't honestly, I thought it was like another one of those like silly, like, oh, this is like a Twitter killer, like decentralized, like me social media. I actually had really low expectations. And then I tried it out and I was like, and I looked at the Nostr protocol and I was like, I love this. It's so simple. It's not over engineered. No one's bike shedding. People are just building. People are just building in this community. And like the vibes were just so good. There wasn't like this, it wasn't stuffy. It wasn't, it was just like everyone is just shipping stuff. And like the haters can hate whatever, we're just going to write code. That was the attitude. And I loved that. And the app was working really well. And I was like, oh, this is really impressive. This is a cool protocol. And then I realized that the way the protocol works, which is basically just these event objects, just bouncing around and being routed to anyone who subscribes to them based on various criteria. I realized that that the programming language, the main programming language we use at River is called Elixir. It's built on something called the Erlang virtual machine, which was originally a tool built by Ericsson in the 80s and 90s to power telecom infrastructure. But it's incredibly, it's perfected for scaling message routing and highly concurrent systems with tons of different people subscribing to things. And I realized, oh, wow, the programming language we use would be perfect to build a relay in the Nostr protocol. In the Nostr protocol, there's relays and there's clients. A client is like an app, and a relay is like the server that the app's connected. And I was like, I'm just going to build a relay for Nostr using Elixir. And so that's what I did over the break. And I just posted it on Twitter yesterday, and it's still really rough around the edges. Don't judge my code. I haven't programmed in a while. But I put it under the River org, and we might end up just maintaining it and keep moving it forward and just see what happens, run a relay. And maybe there's something we do officially with that and integrate it into Lightning or our app somehow, who knows? But right now it's just a fun project.
Awesome. Yeah, that sounds a lot of fun. And I'd love to see where Nostr goes. I'd love to, have Will on the show. I think I've reached out to him, but I'm sure he's super busy right now. And probably things are kind of hectic.
I think he's just coding 24/7.
Maybe that's it. Maybe he's just got that zest. So then what about mining and what's been happening at River with mining? And I know you guys rolled out that service. I'm super interested. I was checking out prices the other day. They look really good. So what's going on with mining as a service at River? And I know we touched on it a little earlier, but I'd love to get into it some more.
Sure. So the mining product at River sort of was the result of us asking, okay, we have custody, we have brokerage, we have a nice wallet with Lightning and on-chain transactions. What do we do next? We're like, well, people really want to mine Bitcoin. We get asked all the time by our customers, can I mine Bitcoin with River? And we used to ask, well, why don't you just buy it? They're like, oh no, but I don't want to just buy Bitcoin. I want to mine it. I want to cash flow. And we're like, oh, interesting. And one of the reasons that we got to learn was people are doing the math. And they want this they're sort of doing the math on what their dollar cash flows could be, but then they wanted a Bitcoin. So it was just like a different risk reward trade-off than the Bitcoin brokerage. We're like, this is really interesting. These, lots of people want this. And so we started going down the rabbit hole on the mining thing. And we were like, well, what's the right product to build without, this being a security or something like that. And came to the conclusion that, well, we could integrate hosted mining directly into the River app. The Bitcoin just shows up in your River account every day. Because we realized most of the people asking for this, they didn't actually want to have a mining pool account and deal with all of that. They just wanted the Bitcoin. And so we built this product where you can just buy miners in the app. They're your machines. You own the machine. This isn't like cloud mining where there's shared pooled machines and you're hoping that we have real things behind. No, it's there's a real machine for every miner a customer buys. And it's hosted at a high quality co-location facility. And it's your machine in your name. It's your equipment, and we're running it for you. And then just depositing your Bitcoin to your account daily. And so that product grew a lot in 2022. We really scaled that. And actually, one of the challenges was satisfying demand. We ran out of hosting space pretty quickly. And since then, the market has cooled off a lot. So it's not as difficult to keep up with sort of the lower demand right now. But one of the biggest learnings for us, and this is another place where sort of our mode of operation and also a little bit of luck sort of just came in handy, was because we didn't scale that business so fast, because we were kind of constrained, we didn't get over our skis with like moving into like colo facilities that were like lower quality, or were over levered, or had a lot of issues. And so our we're luckily we weren't with a bunch of colo facilities that just like completely failed. We had some higher quality partners, and so the a lot of mining was tough. Sorry for the sirens outside.
I know they're coming for you.
Yeah, who knows? Hopefully not. Maybe they're driving SBF somewhere.
That's right. You guys are in the same town ish.
But so where was I? Oh yeah, so so talking about counterparty risks. So one of the things in the mining industry, was similar to what people learned in sort of the yield side of the industry, which is counterparty risk matters, balance sheets matter. Lots of miners were over levered, raised a lot of debt. I think the root of 90% of the issues in the industry was spreadsheet people extrapolating a growth curve that was never real. And lots of these companies did that. They borrowed at high interest rates and thought it was going to be up only forever, and didn't work out. So luckily, our clients have have had a great experience. Other than sort of like the economic performance is obviously down right now, but in terms of machines running and things going well, we've I think probably been the highest quality provider out there. And we've done right by our clients if there ever were sort of hiccups or issues. So overall, I'm very happy with the way that product has grown. I think we're gonna be very selective about scaling it in 2023. Interestingly, like I said, we're not really demand constrained, we're supply constrained, and it's one of those things where we're kind of sold out right now. We have like a little bit of wiggle room, and we'll only keep selling more if we think we can do it really safely.
Yeah, I mean, I'm loving this. I was checking this out, so I want to think through this a little bit more. So let's say I think within the app you can purchase a few different models, and there are
Yes.
different price points. And I'm not sure how you run the program. It sounds like it's a blended program where you buy a model, it's housed wherever it's housed, but everyone kind of gets the same electricity rate, maybe. I'm not sure if you manage all that maybe as a homogenous group for everybody, and they don't. So, but around that, is there maybe a dashboard to see how much sats you're getting a month, a week, a day, a block? Is there sort of any help or models around, like, if you get this miner, you're going to have this kind of run rate or that run rate or this kind of ROI?
Yeah, all good questions. So we procured our hosting space with specialized mining facilities, by putting up a lot of cash and locking in very low energy rates and the right to mine with this infrastructure. So we have hosting rates that almost none of our clients could get residentially or just by themselves at their scale. We charge a margin on that, so to make some money ourselves, and that's the energy rate we give our customers. And yes, so when you're a river mining client and you have miners in your river account, you have a dashboard where you can see your earnings, all the tax information associated with that, and then all of the uptime information. So miners do go down. Mining colo facilities are not like internet data centers. They'll turn off for an hour here or there during peak demand, depending on where they're located. So one of the things we like to do is be very transparent about that. And so we show basically real-time hash rate and your historical hash rate in a dashboard in the River account. You can see that on your mobile app or on the website, river.com. And then in terms of economic projections, so building a calculator has been on our roadmap. We haven't actually built one, but there's a lot of great mining profitability calculators out there already that we just send people to. And so if you're interested in that, we'd be happy to help guide you and help you figure out what the economic performance could be.
Yeah, I think I'm going to buy a couple of miners if there's any left before the show airs. That That'll be
Nice.
my first mover advantage. In terms of the miners, so let's say you buy a couple of miners and some time goes by, and for whatever reason, you either don't want the miners anymore, or you want to mine not with River. Can you obtain the physical miner and or resell the miner?
So yes, they're your miners. So if you do want to claim them and take delivery of them, we can facilitate that. But when you buy a River miner, you do lock in a hosting agreement where you're on the hook for that hosting term. So you would still have to pay that hosting agreement if you did would take delivery of your miners. In terms of selling, so we have had people find their own buyers and facilitate a transfer. We don't currently have a product to facilitate trading within the app, but it's something we're evaluating.
Yeah, sounds good. And then so it sounds like the if you mine with River, though, it's not KYC free sats. So then what are your thoughts though on KYC free Bitcoin just in general?
I mean, it's great. I love, I think KYC Bitcoin is definitely better than KYC Bitcoin. The reason that the mining product isn't KYC free is because we wanted to build it seamlessly into the product. And the product, if we're holding on to your coins for you, has to be KYC. If we sort of came to the determination that if you really cared about that, and you knew how to access a mining pool and do your own custody, this wasn't the product you needed. There are other solutions out there for you already. The goal of this product was to bring mining to a broader market segment, not the super user that knows everything about Bitcoin. So that was the reason that we built the product the way we did. So, but overall, I'm always a fan of getting KYC free sats.
Makes sense. And then sticking on, I guess, going back to mining a little bit, what is a Zeta hash?
Yeah, so we put out a mining report. So Sam, our head of research, who does an amazing job with these research reports. He did the Lightning research report. He just did we put out this mining research report recently, talking about Bitcoin mining at 1 Zeta hash. And so a Zeta hash is, it's a sort of like, scientific, SI unit, sort of like, kilohash, mega hash, gigahash, terahash, exahash, petahash, zetahash. Petahash, exahash, zetahash. So right now the network's at sort of exahash territory, which is 1 exahash is 1,000 petahash. And so what's next? What's the next order of magnitude? Zeta hash is the next order of magnitude in terms of hash rate from where we are today. So we were talking about sort of like, is that going to happen? What would the network look like at that point? Who would be mining? And what would the economics be? And so it's an interesting report for people who want to check it out.
Yeah, I mean, those are some good questions right there. I mean, how many mining rigs is that? And I think really what I want to ask, who would be mining at that point?
Yeah, I haven't done the math on like how many S19J Pros that would be. But yeah, so the people mining at that scale are going to be big players, energy companies, or people tied very closely with energy companies. I think that likely one scenario is like, not that like Exxon or like ERCOT or whatever power generation facilities plug into ERCOT are themselves like mining experts. My guess is they like have a partnership where they have somebody come in and run these facilities like for them, and they're really tied at the hip, or maybe it's some sort of JV or even an acquisition. And I think it's TBD, right? I think the jury's still out on how this plays out. Does hash rate go that high, or do people sort of chill out for a while? I think infrastructure takes a long time to build, right? There's always a lag, and what we're seeing right now is the infrastructure that was sort of planned and invested in 2021, like still kind of coming online, even though the economics are not very good right now. We're probably near the tail end of that. And so if new infrastructure is going to come online in a year, well, that has to be planned now. And there's a lot fewer people planning infrastructure construction now than a year ago. So there's this inherent lag. You can't just bring miners online the minute the Bitcoin price goes up. Someone has to build the physical places to plug this in and the physical energy generation. It's not like it's just software. And I think one of the biggest wake up calls for people in this industry was like, if you hadn't done mining before and you had just done the software side of Bitcoin, it's a very different space. It's a very different culture. It's a very different skill set. It's like there's all sorts of things you never have to think about in the software world happening, like shipping and geopolitics and tariffs and customs and a rat crawled in a transformer and blew the thing up, and it's like all this stuff that you don't have, that's abstracted away in the software world. So it's it's an interesting industry.
Yeah, very interesting. Do you think that, or what are your thoughts on the long tail of mining? So let's say, even if it's in the Pareto 80-20 world where 80% of mining is done by very few entities and 10% is still done by very few entities, 5, whatever. But is there a long tail of people using space heaters in the future to mine Bitcoin? Their refrigerator has a chip in it to mine Bitcoin. Their Tesla has a chip in it to mine Bitcoin. Do you see that, or does that get wiped out by this sort of harnessing of energy?
I don't think it's going to be 80. I don't think it's going to be like a 20 like long tail. I mean, I don't know how big it will be. Maybe a few percent of like sort of mom and pop kind of things, where really it's really like, if you look at sort of the small scale miners, like they just really like it and they don't care about the economics, which is not most people, but sure, there's people like that where they just don't care about the economics. They just like mining. And then there are people where they have some weird, like it's for some unfair advantage for some reason. Like, I don't know, they live on like they have property and they have like flared gas and like just like free. Or they're in a college dorm room and it's free electricity. Or weird just things where like people for some reason or another just have like really cheap energy. Or maybe it's like solar, they have excess energy in the summer in Florida, and so like, might as well, right? It's free. So I think you'll see that, and if you add all of that up around the world, like all this like latent energy that just like can't be used, that could be big someday. I know there's the company in Africa, I forget the name of it. They're helping African communities basically utilize existing energy infrastructure that, like, some of these like communities apparently have like hydro power that's just sort of like not used all the time, and just like might as well mine. And so I don't know. I think we'll see like more of that as it becomes more accessible. And I think that's the healthiest kind of hash rate. That's the hash rate I like to see. It's really boring to see. Like, honestly, like it's not like I get excited about the prospects of ExxonMobil hashing, mining. Actually, it's like,
Right.
I kind of miss the old plug in a GPU or your just computer and just mine days.
Sure.
I don't think we'll ever get back to that, but
Sure,
I think it'll always be around.
Yeah, the DIY kind of do-it-yourself mentality. The most read River Learn article of 2022 was "Who Owns the Most Bitcoin?"
Yeah.
So what are your thoughts on that piece and Bitcoin ownership?
Yeah, I mean, obviously it's hard to know for sure, right? A lot of that data is taken from like on-chain information. It's always possible that people own and shared custodians, or their coins are split up among a lot of different addresses. But I do think it's one of those questions lots of people want to know the answer to, right? The first time, like, in the fiat world, like the Forbes list is a manufactured, like, it's like a product, right? It's like, and people love it. Like, I want to know who the richest people are. And so I think that's naturally the same curiosity exists in the Bitcoin world. Like, well, hey, I learned about this Bitcoin thing. That's pretty cool. Well, the second question is, well, who knows the most, right? Who's the richest Bitcoin guy? And so, yeah, I don't, I don't know if, who exactly was the most Bitcoin. Probably Satoshi. But we have some information on there about who the top ones might be. So yeah, I guess people like that.
Sure. And then a lot of times, I mean, it always comes up about inheritance. How's River thinking about inheritance?
So we have productize this, and we've had it for a while now. We could probably do a little bit better job at publicizing it, but we have a built-in system to designate beneficiaries for your River account, and we have a process that has been used now a number of times, unfortunately, sadly, but also in many ways, it's the product doing what it's designed for, to transfer those Bitcoin over to loved ones when they die. People who self-custody really struggle with this. It's really like, as an individual, figuring out self-custody is straightforward. Figuring out how to make it work when people in your family are way less interested in this stuff than you are is very challenging, right? Trying to teach your wife about multi-sig or your kids and all, it's a lot. And so some people just want this, and we're happy to provide it, where they say, I want to leave my Bitcoin to my wife or my daughter or my son. Here's their name, here's their personal information, here's their contact information. And so, and then all they have to do is tell their loved one, hey, if something ever happens to me, we have an account at River. They have a process for recovering the Bitcoin. Go to them. And so we have this process where we hold the when we get notified of the death of somebody, we do a very thorough check to make sure that that's real, that there isn't someone lying here. Otherwise, it'd be a security gap. We notify the account owner and try to reach them, and to make sure that over the course of I think it's a couple months. So we'll hold it for a couple months and constantly, and try and reach this person before releasing anything. And we require documentation of death and all that stuff. So that's how it works.
Yeah, I think that's a tremendous product. I mean, and service. I do think people who do self-custody, and I really believe that self-custody is important as a Bitcoiner, but that is a struggle just on the learning front and the transition. And I think services and products like this are very important, will help people bridge that gap. A little bit about the future of exchanges. So is River self-mining today?
Yeah, we do have some self-mining. We have some machines that we own that mine to a River account. And yeah, so we do. And yeah, it's definitely it's a small revenue stream for us, but it's fun.
And so then my follow-up question is, will exchanges need to self-mine in the future to acquire liquidity?
I don't think so. I think Bitcoin will just get more liquid. Bitcoin's a very liquid market. There's lots of people trading it. There's lots of market makers. So I don't think so. I don't think there's going to be a world where where Bitcoin is a major reserve currency and there's no liquidity. Those two futures can't really coexist.
Right. And then I think you have a personal or political anecdote related to FTX. Oh,
yeah. Sort of, how I found out that there was some funny business sort of politically going on. So, funny enough, the first thing that really clued me off that something was sketchy about FTX was when I went to the website. And in fact, what actually sort of got me looking into FTX was somebody told me about a year and a half ago, 2 years ago, it's like, FTX, they get all this stuff done. They only have 15 engineers. What are we doing? How come River isn't doing more? How is FTX being so successful with so few people? And I was like, that's interesting. I didn't know much about FTX, but let me check this thing out. And if I'm being honest, I was a little bit jealous at first. I was like, this is amazing. How can they accomplish that with so few people? And then I started looking into it, and I was like, something is off here. Something is really off. And I started I started looking at their messaging, the ESG button on the website, and Sam's very oh, I'm here to save the world type message, and it just set my my spidey senses off. I respect a business that's out executing me, that's doing really, really well, and is running honestly, props to them. In fact, I look at them and be like, hey, how can I learn from you, right? But with FTX, I was like, something's not right here. And so I'm pretty involved in sort of federal politics in the United States. And one of my, someone I know was running for office in Arkansas, and I thought they would be a really good senator. And they were running against this incumbent Republican in a primary race, and his name was John Bozeman, just a like old school kind of like old guy, like probably like 70s, been there forever, like let's get some fresh blood in here, right? And all of a sudden, so the candidate that I liked was doing very well and was really giving a run for his money in the primaries. And all of a sudden, at the last minute, all this money for John Bozeman came in from a super PAC, and I was like, that's odd. Like, where's the money coming from? It was a crypto super PAC, and I was like, what? Like, this guy doesn't even know what crypto is. Like, what's going on here? Something's not right. And then I sort of like dug and traced it back and realized it was FTX money, and it was from this guy Sam. I was like, what the heck? This is so weird. Why? And then I started putting the pieces together, and I realized that Bozeman was slated to be the chair of the agriculture committee, and I had some help figuring this out because I don't know all the committee stuff super well. But what does the agriculture committee oversee? What would that have to do with crypto? Well, the agriculture committee oversees the CFTC, because historically commodities were for crops. So clearly I saw that Sam was putting the pieces in place for regulatory capture and playing chess. I also knew that Sam didn't give two shits about ESG, because I knew about some of his investments in very dirty things. And so I knew something wasn't right. Like, I knew just like there, like, and so I actually made a tweet like in the summer, like, you might hate Coinbase, but you better hope FTX doesn't beat Coinbase, because they are a pure player of the game. There's no morals. There's nothing. It's a pure game. And it turns out that it was more of a game than I had even thought. And so, that was sort of like what clued me into like, there is weird stuff going on here. That was a bit of a long story, but I don't think the saga's even, maybe it's just getting started. Who knows?
I think I heard you on John Vallis mention in his 2022 wrap up that your hunch was that FTX as a trading company or crypto firm was spun up after the scam to fill in the gaps. Was that what you would get? I think that's what you said.
Well, I don't know if I said that with certainty. Is so much that like I wouldn't.
That's what you felt.
Well, look, I wouldn't be well. I sort of have this like two sort of thoughts. Like, on one hand, I feel like the story of how he originally made the original fortune with Alameda is very fishy. Like,
it's bullshit.
It doesn't pass the sniff test. Like,
nope.
You did an ARB like years after like tons of people had been ARBing Bitcoin, and you made billions of, like, it just doesn't really make any sense. Like, something's off there. But let's say that's true. I could see how it happens where you're running a trading operation. You're like, oh, well, we should just make like, it's probably like, well, let's start an exchange and then we can like trade against our users. Like, honestly, that was just like a given. Everyone was just assuming that was like, that wasn't even like an assumption that they weren't doing that. That was just known. They were like, oh, well, they're so smart because they're doing that, right? They were like, well, we can get away with this. Maybe they started losing, like they started placing losing trades, and they were like, uh-oh, right? Maybe they didn't intend to run a criminal operation. Like, I have a hard time knowing, like, I don't know. I don't have a hard time.
Criminal from the start.
It does. And I could see how it maybe just like got out of hand very quickly. Because here's the thing, right? They're very smart, like, in a way. Like, they're not stupid. Like, they're like high IQ people, right? So they had to think, if they were going to run a scam, they were going to run a scam that wouldn't just like end like with them going to federal prison, right? So maybe they just maybe they made the same mistake as everyone else, and they just extrapolated that growth rate and thought, well, we're good. We're only 20-30% under, but I don't know.
Yeah. I would have thought that. That's kind of what I was kind of grokking from the beginning. But the fact that, deposits were wired to Alameda and not to FTX, and that, I mean, the fact that I think his parents were compliance officers at the firm, and, Stanford law
really? I didn't hear that.
professors, or
They're
acting
sketchy.
as compliance officers, maybe advising and guiding, if not full-time employees. And it just, and the funneling of money to various parties, it seems like the whole thing was a rug pull. But it makes you question. I mean, they could have made money not trading against their clients. They could have made a lot of money trading against their clients. They didn't have to steal user funds to do any of that.
But what was their end game, right? Their end game wasn't federal prison.
So I agree with you
game?
there. And yeah, so I mean, it's kind of like peeling layers of onion. I'm sure I'm not right, or we're not right, but we're getting closer maybe. And it's definitely not what it seems. So, and I think you might be onto something a little bit where, like, yeah, we're running a little bit of a fractional reserve system here, but where the margin's close enough that, and then they ran into giant volatility and maybe even some competitor attacks. And there's just so many strings to that. So we'll let that fly off a little bit there into the wind. What I wanted to accomplish here, though, and I think we did, but I want to open it up to you, is, I wanted to peel back, or we wanted to peel back the how the sausage is made in an exchange. So is there maybe anything else that we need to cover, or that you could share with us about what, how the operation works over at an exchange?
Yeah. I mean, everyone runs companies differently, right? The way we run things at River is probably how somebody who is optimizing, like a relatively smart person who's optimizing for safety and minimizing counterparty risk, would build it if they had to build it from the ground up. So, I think like the easiest way to explain like how River works, and we're actually going to put a write-up on this at some point soon, is for like, how does a Bitcoin flow through River? And again, this might be different than other companies. Like, I think there are probably some exchanges that are doing things with deposits to make more money. And, who knows when those skeletons might come out of the closet. Like, if they only lost 10% of assets during this whole crash, they might be able to dig their way out, right? But at River, and you have to think about it, right? If you're running an exchange and you're sitting on let's say it's a medium-sized exchange. Let's say you're sitting on $1 billion in Bitcoin. And you can get 5% on Bitcoin, or 10. You're like, well, you're doing the math. You're like, well, hold on a sec. Like, that's interesting. That's a revenue stream I didn't even realize we would have. And all of a sudden, it's going well, and you're like, oh, I'm a genius. And then one day, it's like that chart with like the quality of life of a turkey, like it goes up, and then boom, the day before Thanksgiving. So so at River, sort of the way it works is much more boring than that. When you buy Bitcoin on River, we're executing that trade either directly on a trading venue, or with an OTC desk counterparty, and then we settle with our desks daily, and those Bitcoin go into River's custody, and only come out when the user makes a withdrawal. And so it's really that simple. Now there's like little bits and pieces, like managing hot and cold and all that stuff. But 98% of our deposits are in cold custody. So there's not a whole lot of interesting stuff there. And that's the way we like it. I have a few sort of tenets that I have with River. And like the big one is like, we only make sleep at night decisions. Like if we're making a strategic or business or even operational decision, and we're not going to be able to sleep at night as well as we did the night before by doing this, then we're not doing it. And then I sort of like quantify that with like, we shouldn't do anything where we're not comfortable with the prospects if the market corrects 80%. So like if we're building a new business line or building a new product, we should plan like knowing with 100% certainty, like an 80% correction will happen. Like assume that will happen in our planning. Don't extrapolate out bull markets. And then another one is, every client at River should be able to withdraw 100% of their Bitcoin and nothing crazy happens to the company. So, in fact, if 100% of River clients withdrew their coins tomorrow, it'd be actually like, I'd kind of be excited, right? Because it's like, I don't have to keep these Bitcoin safe anymore, right?
And Bitcoin's winning that way, yeah.
Yeah, and Bitcoin's winning, right? And so that's another one. So in any product we have, everyone should be able to withdraw all their Bitcoin, and there's no operational hiccups at River. So those are sort of like the invariants I like to maintain at the company to keep the culture the way it is as we grow. And so far it's working.
Yeah, well, I appreciate everything you're doing. A couple of years ago, around this time of New Year's, I was spending time with some friends, my wife and I, and the kids, and we were telling them about Bitcoin, and they got really interested, and they started telling them about River, and they started, they bought some, and then they started DCAing, and it was this New Year's that I was really trying to go over self-custody with them. And we were talking, and they were saying all the right things. They were getting it, and they were even like, "Oh, with gold, you don't even own your gold." And I'm like, "But guys, if and but they're like, Cedric, you said River's the best," and I said, "It is, but you're still, and you're not truly a Bitcoiner until you take possession of your Bitcoin." And I was explaining, River doesn't make money off holding your Bitcoin. They do a great job of it, and maybe the best job in the business. But the whole point is to take custody, and I just encourage them to just even a little bit, try to take a little bit of custody and start learning and going from there.
Exactly.
And I want to read a River tweet. At River, we perform the difficult regulatory work required to control our own custody from the ground up. Many other Bitcoin-only companies have not, and are therefore using sketchy shared custodians that have insane legal risks from serving criminal enterprises like FTX. And I think it might have been you, or I think maybe they continued on in the thread, but even if you self-custody, there's some period of time where your coin sits with a third party. So I think where you buy your Bitcoin is very important. That's why I like working with you guys. I'm kind of curious how things are going in the Columbus office. It's a great town. I did get to spend a little more than about 4 or 6 months going to work there in Cleveland, actually, not in Columbus, but really enjoyed my time in Ohio. How are things going with the Columbus office?
Columbus office is great. It's like the heart of the company's culture. It's our biggest office by far, and the team there is awesome. We have a lot of different functions based in Columbus, and while we are officially a work from anywhere company, the people in Columbus love being in the office together because, I think we have a pretty fun culture. I think most people at River this is probably the best job they've ever had. And I couldn't think of a better job being able to work in Bitcoin all day. So yeah, it's a fun culture. I think we're also helping host some events over there, Bitcoin meetups. I think there was like a Columbus Bitcoin meetup we helped host. So yeah, if you're in Ohio or you're in Columbus, check out our Twitter and see if there's any events coming up that we'll be hosting.
That sounds awesome. And then my final question for you is, what are your thoughts on this bear market? How long will it last? And maybe what the next cycle is like?
So I'm preparing for another year of this. I've told our company that it's like that's set that expectation, right? The next year we should assume is going to be slow, but we should be ready if things get nuts all of a sudden and really turn around. And in many ways, having a year, kind of quote unquote, a year off is a little bit of a relief because we can finally do the things that we were never able to do when things were crazy to really prepare for the next bull market. So, it's sort of like there's a yin and a yang to this. Part of me is like happy that this bear market will continue for a while more because it allows us to just fix a bunch of the stuff that we haven't gotten around to yet. But the other half of me is like, bear markets are boring, like let's get the price rallying again and start making money. So I live in that duality, but from just the way we like to run things conservatively, I basically set the expectation. The whole company it's going to be like, expect a very slow year. We're very financially healthy, so we're fine. Well, we have the resources. We're lucky. We have the resources to just keep building through this. But yeah, be ready for it to turn around at any point.
Yeah. Awesome, man. This has been so dope. I really appreciate you coming on. I think it's great to, hear from you during a time like this, and the accountability and the visibility and just even outlining, like we were saying, how the sausage is made so people can get a better grasp of what's going on behind the scenes. So I'll leave it to you for any parting words. Obviously, people can find River at river.com. But, let people know where they can find you and anything that you want to point out.
Yeah, you can find me on Twitter at Leishman, Leishman. And yeah, I'd say, my parting words are, this is the bear markets are where the people in the bull markets look back and realize that's where they made their money. And the bear markets are also where the entrepreneurs make their money. The people who are making billions of dollars in the next bull market are the people who built in the bear market. So bear market's time for building. There's time for, investing when other people are scared. And that's how how I view things. So use it as an opportunity to focus and level up, and you'll be happy. You'll be happy when the market turns around.
Well, I'm excited to see how excited that you are. And I agree with you. Bear markets are for building, and I think it's where the joy will come from the pain, and the people that stick around through conviction and knowledge, because that's why you should be here. But I agree with everything you said. So thank you so much, Alex. Really appreciate it.
Absolutely. Thanks for having me on the show.
Thank you so much for checking out this episode. Again, make sure that you're subscribed to the Bitcoin Matrix podcast so you don't miss out on any fresh and dope content. I'd love to hear your feedback. Leave a comment or send me an email. Thanks to Alexander Leishman for taking the time to come on the show. I also want to thank our sponsors, River, CoinKite, and the Bitcoin Conference for powering the show. Huge shout out and much appreciation to those of you who are streaming and boosting the show for sats on the Fountain app. The Boost legend, Eric99, boosted my rip with Lawrence Lepard 50,000 sats and wrote, "Stay humble, stack sats, thank you for everything that you do." North of the Wall wrote, "Amazing episode. Best one I've heard with Lawrence Lepard," and boosted the show 2,100 sats. User 1994 wrote, "We will win." This kind of shit keeps me going, fam. Susie BDDS, Dr. Robert Malone, Eric Kaysen, Greg Zaj, Clemenza from the Meat Mafia, Robert Malka, Nozomi Hayesi, and Eric Weiss are up next. Stay humble, stack sats, and get laser focused out there. This is Cedric. Peace.